Hello, everyone. My name is Zane Christopher. I am Senior VP for TaxSlayer.com. I want to welcome everyone for logging on to YouTube and participating in our Affordable Care Act session. We're not really a Q&A session, but just to log on to use some information about the Affordable Care Act. And here at TaxSlayer, we are ready for all of your Affordable Care Act needs. If you're a returning user, I think you're going to find there's hardly any change in the software, and the Affordable Care Act is a painless process. If you're new to us, we appreciate your business, and I think you're going to find that our process is very easy compared to any other software company out there on the market. So basically, kind of what I'm going to do is I'm going to give you a basic overview of the Affordable Care Act and how it may affect your refund or balance due. Okay. And again, for the most part, it's a fairly easy process concerning your tax return. Okay. Now, the Affordable Care Act itself, when the law was placed, when the law became in effect, basically our government wants to know whether or not you and your family had health insurance for all of 2014. And the questions you're going to be asked is, do you, your spouse, and your dependents have minimal essential coverage for all 2014? Okay, and what minimal essential coverage means is just a regular health care policy provided by your employer, for example. It could be a self-paid health insurance policy, and also it could be a policy that has been purchased through what they call the marketplace. And I'm going to talk about the marketplace here in just a minute. Medicare, Medicaid, that is considered insurance. If you have those, if you have under those types of policies, then you are covered. You have minimal essential coverage. If you're in the military, or they call TRICARE, these other types of policies, you're active. If you have a family member who's active duty, that is considered essential minimum essential coverage, and you are covered for health insurance needs. Now, keep in mind supplemental policies that you purchase. For example, if you get hurt at work and you can't go back to work, and your insurance company pays you a part of your salary, that is not considered minimal essential coverage. Also, vision, dental, that does not qualify as minimal essential coverage. You have to have medical insurance to be considered having minimal essential coverage. And what that overall means, if you don't have minimal essential coverage, if you don't have health insurance for the whole year or part of the year, you're going to be responsible for what they call a shared responsibility payment. In other words, a penalty. And that will affect your refund or balance due. Okay, but however, it only applies to the months that you are not covered. Okay, so if you had health insurance for part of the year, and say for 6 months, and you didn't have for the other 6 months, you're only going to be penalized for those 6 months. Okay. Now, the shared responsibility payment, how is it calculated? Okay, it's the higher of two amounts. The first one is it's going to be 1% of the excess of your income over your filing threshold. Of course, what is a filing threshold? Filing threshold is the amount of income required to file an income tax return. Okay, for example, if you're married filing jointly, you get a standard deduction of $12,400 plus 2 exemptions at $39.50 a piece, and that's $7,900. You add those two together, $12,400 plus $7,900, that's $20,300. Okay, so if you're under $20,300, there's no share responsibility payment. So you're not required to have health insurance if you're under that filing threshold in that situation. Okay. Okay. That's the first one. As I said, $95, 1% of the excess, as I just mentioned, over the filing threshold. And the second one is, or it's $95 a person, and that's peaked out at $285. Okay. And it doesn't sound like a whole lot of money. However, for an example, the way this would calculate out, let's say that you're married filing jointly, you make $50,000 and you have 3 dependents, and you have no insurance, your share responsibility payment is going to run about $300. That's basically what's going to cost you. Okay, so again, if you're $50,000, 3 dependents, you and your wife do not have health insurance, the penalty will be about $300, and that will come off your refund or be added to the amount that you owe. Okay, okay, now, for 2015, that amount is going to increase. Okay, that is for 2015, it's going to be 2% or $325 a person, and that's going to max out at $975. So again, that share responsibility payment for not having health insurance is going to increase from year to year. Okay. And basically what that means is your government is asking you to seek avenues of obtaining health insurance. Okay. Okay. Now this is calculated on Form 8965. There's a worksheet on page 5, and it will calculate, and our software will handle all of this. Okay. Okay. And which I have to keep in mind, again, it's only calculated on months that you don't have health insurance. Okay. So it could be a situation where the taxpayer might not have health insurance. However, the kids may be on Medicaid or Medicare. So only the taxpayer would have to be responsible for paying a penalty because the children have health insurance. Okay. So again, it's only calculated based on the months that you don't have it. Okay. You can access our worksheet in the software. It's very easy to do, and the questions are self-explanatory. Okay. Now, there are situations where you may qualify for an exemption to where you don't have to pay the shared responsibility payment, and that's called a a health coverage exemption. Okay, and that is also accessed through this Form 8965. Okay, and what that means, there's individuals out there that are not required health insurance. Okay, and examples of that would be, again, as I just mentioned, if you fall under the income filing threshold, there is no shared responsibility payment. Also, it could be considered unaffordable. You could be a member of an Indian tribe. Someone in your family could have been incarcerated. There could be religious reasons, and there's also hardship reasons as well too. That someone, which means domestic abuse, or someone who can't pay their power bill, something like that. There are hardship exemptions to where the taxpayer is not responsible for the shared responsibility payment. Okay, you're not required to have health insurance. Okay. Some of these exemptions are granted through the marketplace. As I mentioned earlier, what is the marketplace? The marketplace is, if I think everybody knows, healthcare.gov, and that's where our federal government has set up a website that you log on to, enter all your information, and they will seek an insurance company to help you get insurance through the marketplace. Also, the marketplace is considered your state insurance exchange. And there's 16, 17, 18, some odd states that have their own health insurance website. So in other words, if you live in, I believe, the state of New York, you go to the New York State Insurance Exchange, and that's where you get your health insurance. Okay. Some states don't have it. I think South Carolina and Georgia do not have it. You have to go to healthcare.gov to obtain your health insurance if you don't have a way to get it through your employer. Now, again, we'll talk about the exemptions. So this goes back to the marketplace. So what you have to keep in mind is you're not allowed to, on some of these exemptions, just to select on the return, hey, I had domestic abuse for 1 month of the year, I'm exempt for the whole year. That's not how it works. You may have to go to the marketplace to obtain an exemption certificate number to be exempt from paying the shared responsibility payment. Okay, so some of these, for example, I believe the Indian tribes, incarceration, you're not allowed to just click on the exemption box and enter that you're exempt for the whole year. You have to go to the marketplace to become exempt and to not pay the shared responsibility payment. Okay. However, there's some instances where you can go into the software and you can elect that you are exempt based on certain reasons on the return and not pay the shared responsibility payment. Okay. So that's a couple of things you need to be aware of. Okay. So again, in most instances, that exemption certificate number may be required for Form 8965. Okay, next, talk about some of you may have already gone to the marketplace and you have received an advance payment to cover your health insurance premiums from the federal government. And basically this ties into the fact that not everyone can afford medical insurance. So the government has, again, set up the marketplace where you can go in, enter in all your income, your family information, situation, to see whether or not you will qualify for some advanced premiums. And this is what they call an advance payment. So these, you may have gone on the healthcare.gov or to your state exchange. You've done what you call a marketplace estimate. And what happens is the federal government will pay the insurance directly for your health insurance, okay? And what that means is, as a taxpayer, you're going to receive Form 1095A, Health Insurance Marketplace Statement. So again, if you go to the marketplace and you've received your health insurance premiums from the government that's been paid to the health insurance company, you're going to receive that Form 1095A, okay? If you get that document, you're going to be required to fill out Form 8962, which is the premium tax credit form. So you'll be required to fill that form out. That's all in software, pretty self-explanatory. It basically, the menus will ask you the numbers off that 1095A form. You enter in the software and it'll calculate it for you, okay? And now what that form does, the 8962, it figures your premium tax credit, and it's going to reconcile the advanced premium tax credit payment that was made to your insurance company, okay? Again, the 1095A is required. If you didn't go to the marketplace or to your state exchange and do this process, you're not going to be required to fill out this form at all, okay? This particular form can increase your refund, or it could make you owe a little bit of money back to the government, okay? So again, it could make the refund larger, or it could be what you call an excess premium payment, okay? Now, what excess premium payment means is that you've gone to the marketplace and you have got a marketplace estimate, and you have figured the estimate incorrectly. You have not figured your income correctly, or your family situation, and it may be a situation where you may have to pay some of the money back, and that will be calculated on the return as well too, okay? So again, if you get to 1095A, you have to fill out Form 8962. Now, we talked about 1095A. Again, that is the health insurance marketplace statement that shows you that you received minimal central coverage for so many months that you received insurance through the marketplace. Other 1095s that you're going to see in future years, the first one I want to talk about is the 1095C. That is employer provided health insurance cover offer and coverage. And that is something that your employer may give you that shows all the months that you had minimal central coverage with your insurance company that you had through your employer, okay? And these are going to be required, they're not required for this coming, they're not required to be sent to you in 2015, but they're going to be required to be sent to you in 2016. It's for certain employers. So you will see that form in future years, okay? And that's from your employer. Now, also too, there is 1095B health coverage. That is another 1095 form. And that is from the insurance company indicating minimal central coverage from the insurance company itself. So what is the difference between the 1095C and 1095B? The 1095C comes from the employer. For example, I'm an employee of TaxSlayer, so I'll receive a 1095C from TaxSlayer. My mother, for example, is under my father's insurance, my late father's insurance, and she's not employed. She would receive a 1095B from her health insurance company showing that she had minimal central coverage. So keep in mind, you're going to see these 1095Cs and Bs in future years. Those of you who went to the marketplace, you're going to see 1095A this tax season. Okay? So again, all 1095s, they show a breakdown of the taxpayer spouse dependents that were covered for that particular year, minimal social cover for that year, okay? Now, again, the 1095C and B, those aren't required for this year, so you may not see those, but be on the lookout those for future years. Now, how does this affect your dependents? There may be a situation where you are responsible for the share responsibility payment. You may have dependent children who are in college who do not have health insurance that you're claiming on your return. There may be a situation where you're going to have to complete your children's return first. Information off those returns will need to be entered into your return for the share responsibility payment to be calculated correctly, okay? Same thing with the 8962. If there's a dependent on your return that you received an advanced premium payment through the marketplace, you may have to complete your children's return first. There'll be some information off that. Your children's return that you enter in the software, and our menus are set up to enter the information off of your children's returns. So it's not that difficult. You just may have to do your children's return first. And basically, when it's all said and done, there's been a lot of stuff thrown at you in the news about the Affordable Care Act, but it's really only going to affect 3 lines on the return. Okay. If you look down the back of the 1040, not the 1040EZ or 1040A, the 1040 itself, the back page. Line 46 is going to be the excess premium paid due. And that's what that means is you've gone to the marketplace and you have underestimated your situation, and the insurance company has been paid too much money to cover your insurance. You're going to have to pay part of those premiums back. That's line 46. Line 61 is the shared responsibility payment amount. And what that means, if you don't have health insurance, the software is going to calculate your shared responsibility payment for the months you do not have insurance, and it will put an amount on that line. That's how the amount's calculated on that worksheet 5, as I mentioned. Okay. Also on that line is the checkbox for full year coverage. So when you go into the software and you have health insurance for the whole year for your whole family, you say you have minimal central coverage, boom, it checks that box and you're done. That's all you have to do concerning the Affordable Care Act. Okay. That's on line 61. Line 69 is the net premium tax credit, which is refundable. And that's the one where, as I mentioned just a minute ago, is if you had went to the marketplace and you filled out, you got a marketplace estimate and you're due an additional credit from the marketplace or from the insurance company to cover your health insurance, the IRS will pay that directly to you to cover the rest of your health insurance premiums. So again, TaxSlayer can handle all of your Affordable Care Act needs. And if you have any questions about our Affordable Care Act information, please log on to our site. We have all the information that you need about Affordable Care Act, and you can email us, etc. Thank you for logging on. Have a good day.